Hello, welcome to our first video on the New England Financial Literacy Collaborative channel. My name is Ben, and tonight we're joined by Dr. Jacob Park of Castleton University. We are going to be discussing how financial literacy can shape our lives both professionally and personally. Without
Okay,
further ado, here's Professor Jacob Park. Thank you so
okay.
much, sir.
Thank you, Ben. Thank you for the invitation to be part of this forum. And would like to just talk about it again, as Ben said, is why I think personal financial literacy is so important. So let me just talk a little bit about how I'm going to outline this presentation. So the first thing I want to talk about is just a little bit of, I think, some background in terms of what I consider to be the most important work trends. And I'm going to link it back to the second point, which is why I think personal finance literacy is such an important driver for professional and personal success. Now, I thought that we could have a quick Q&A with Ben and talking about what are some of the implications of this for high school students. Okay. All right, so let me talk a little bit about what I think are the most important work trends. And again, I'm going to loop it back to personal finance. I have to give some just a couple of slides of what I think to be really important. So the first thing I think that we need to keep in mind is how much COVID-19 is changing business in the workplace, right? So there's three areas I think this, according to this recent report by the World Economic Forum, talks about. First point is how much this is pushing toward something all of us are probably aware of, to remote work. Second point is how much sort of digitalization is taking place in business, is accelerating it even further, and how much automation is taking place as a result of COVID. So the automation is very interesting because it's really not something that is new. But what COVID has done in many ways is accelerate that process. For anyone who's ordered something on Amazon is well aware that much of that now is sort of being through algorithms and sort of machine learning and through a lot of technologies on supply chain. And again, you can look at between just 2020 and what we expect in 2025 is not that machines themselves are replacing humans, rather the relationship between is changing. And clearly for some types of tasks, it is increasing. That is the role of machines are playing a much prominent role in business. The other thing is really important to keep in mind too, is that what that result of automation and all the changes taking place because of COVID, that there is this huge emphasis on reskilling, that is upgrading our skills, that even if with a college degree or even like master's degree, that there's a constant need for employees to really think about what kind of skills they're going to need in the future. And just in the next 5 years, the World Economic Forum estimates over half the employees or workforce will need to be retrained and reskilled in some level. So what are the skills that we need to keep in mind too? So these are the top 10 skills defined by the World Economic Forum in 2025. Everything from analytical thinking, innovation, down to problem solving and resiliency. And what's kind of interesting on this list is, despite what we said about personal finance literacy, you don't notice that personal finance appears as a skill. But I'm going to argue that although it may not appear in this kind of list for the future skill lists in many kind of the surveys that are out there, why I think it's so important. So let me get right to that. Okay. So why do I think that personal finance literacy is such an important driver of success, both on a personal level as well as professional level? And I think that there's a really interesting article that appeared in Sports Illustrated. And as many of us know, there are young athletes in the National Football League and also the NBA who signed these multi-million-dollar contracts. And what most people do not realize is how many of them, even before they turning 30, end up retiring in a very short amount of time. They had to file for bankruptcy because they simply did not maintain sort of a good sort of personal financial planning. And this is something you hear all about. Like anyone who's sort of watched ESPN knows there's always some kind of sad story about some athlete, again, not much older in their beyond much in their 30s, who wasted their multi-million-dollar contract on things. Maybe they didn't waste it, but perhaps invested improperly. So this is a very common problem among sort of well-to-do young athletes. But then implication for this, for general population, I think is quite stark. So as an example, according to the 2016 survey done by Champlain College in Vermont, what they found was pretty startling things, that although that financial literacy, as they conclude, are one of the most important areas of critically important to our economy, what they found was that number one, that according to the 2016 survey, that 45% gave themselves only a C, D, or F in their personal financial knowledge. Now, I don't know about you, but C, D, and F is not very good. Okay, that means almost half the population in the U.S. do not feel that they have adequate knowledge on this area. So that's a startling thing. So adults here could be your parents, could be your grandparents, could be your neighbors. So almost half do not feel they have below average knowledge in this very important area. And 26% have not saved anything for retirement. 31% of the adult survey have no savings other than retirement savings. And 60% do not have a budget, monthly or otherwise. And 22% they survey do not pay their bills on time. This is a recipe for all the things that you shouldn't be doing. The question is, if it is so important, why are so few people actually practicing it? And I think there's a couple of reasons for that. So this is a quick snapshot of a typical payroll check that some people, many of us get on a biweekly basis. Now, what's important here is that most people focus on is the amount here, right? How much are you getting paid per se? Now that's important. So more money you make means that you have more discretionary income. That makes sense. Now, if you look below this, in terms of different taxes here, how much, if you have a deduction like insurance, this is all which what the paycheck kind of reflects. Now, most people look at this amount for 2 seconds and they forget everything else. But instead of looking at the amount, what they really need to be thinking about is things like, how do they break down? In other words, here, this income amount, which you get sort of W-2, what we just saw, may come from a full-time employment. But what we never really consider is how much does the income here relate to the expenses that we have, and how does that relate in terms of things like cash flow? So because of COVID, there are millions of households in this country that cannot pay like $400 expense unexpected expense, because they literally do not have that kind of money in their checking account, the savings account. And what we often forget is things like expenses that are fixed, that is things that are, maybe you're paying a mortgage and they pay a certain amount every month, which does not change. But obviously there are more other types of expenses, entertainment, how much you pay for Netflix. These are all variable expenses. So we all kind of treat this as we make the money, but really what we never really spend much time is thinking about the expenses here. So another way to think about this, and I think key concepts I think we think about is, first of all, is what I call the financial ratio, right? So many of us are paying a car payment per month. Now, how does it relate toward the paycheck? Well, obviously we need to figure out, for instance, what is the percentage of the payment you make to your car divided by your net sort of monthly gross income. Now that sounds so self-evident and obvious, but a lot of people don't understand how the percentage that you need to keep in mind. So on average, but the best practice dictates that you shouldn't spend more than 25% to 30% of your income, monthly income, on rent or in your mortgage. But if you live in a very expensive area like New York City, that could actually be 50%, 60%, could be quite high. Then you add to that your car expenses, two of the most typically expensive monthly items for most households. And if you do not have, and you include those two things, that include electricity, and then you can see how the percentage of that can increasingly get to that magical 100% mark. So that means that if all your expenses are creeping up to 70, 80%, that means you don't have enough money left over for other essential items like food and other things. So this is why I think we're in such a bind, that what COVID has exposed is really in many ways, not just sort of economic insecurity among Americans or household. What they're really exposed to is really poor financial planning. And I think that, I'm not saying that I am somehow above all this, but I do think that it's really critically important that these concepts gets understood. So, but I think there's hope. And I just want to sort of end my short talk here with a study that was done by Champlain College in terms of how much training and education on personal finance can make a difference. So what they did was they had a control group of two schools, about 314 students, and they did not give them any kind of financial education training. They had a pilot group with 3 schools and about 500 students, and they were exposed to series of kind of education and personal finance. The result is that the control group, the pilot group that received education, were substantially inclined to avoid debit and ATM fees. And also, they were actually thinking slight increase in number of people that are actually planning how to control making a budget for their for their expenses. So what this show is that it's never too early or never too late even to start your personal finance education. And it would be nice if it's done within a school setting because that's how most people learn this matters. But I think that given that most financial personal finance education is done either by the families or not done at all, it really cannot be left up to the individual to decide to do that. And so this is really important is that there is a problem, but there is a solution in the form of further education and training. And I hope that that's kind of give us a sense of, you know, what we're, it is a problem, but it's not a problem that we cannot address. And I think there is clear evidence to show that we are able to overcome the personal finance challenge among most households if there's proper education and training. So I'll just end there and leave it up to Ben to moderate the discussion.
Awesome. Thank you so much, sir. So prior to this discussion, I received a few comments
Okay.
and some questions. So first, this is from Austin C. What do you think the most important financial literacy concepts are to understand for teens are?
So I think for I'll just sort of relate to a previous slide. And I think that what's probably most important is, can you do a budget? In other words, it's easy to know that most of us can focus on what either how much little money you might make with part-time employment, odd jobs, maybe you get allowances. But really, we don't really spend much time thinking about how much is your income relate to the expenses that you may have. Now, as a many teenagers, you don't need to think of an elaborate budget, but I think this might be a good time to learn maybe using just very simple Excel. And there's a lot of kind of budget kind of formulas you could use. And I think that could be done through an app on your phone. That's a very easy way to do it. So I think the one important thing is just simply understand how to construct the budget and equally important, how to stick to it.
Awesome. Thank you so much. Our second question comes from Timothy K. How important is it to be financially literate to one's future
Right.
success?
So I think that if we're lucky enough to be, making six-figure, 7-figure salaries, perhaps that you don't need to worry about having a personal and kind of focusing on things like, mortgage as such, if you're somehow fortunate enough to make that kind of income. I think for the vast majority of us, we don't have that luxury of having this huge, cash surplus every month. So what we need to be figuring out is making sure that we that even if it's not taught in our schools, I really think it's important that whatever age that you might be, that even things like in grammar school, understand the importance of money. Why do we, how does money work? I mean, is it one of those concepts that we use something we use every day, but very few people understand? For instance, okay, the Federal Reserve, there's a print money, but how does that work? So understand the economics of how this works, and I think it's really so. Whatever level you might be, and I think as you get older into college, and certainly when you're in young professionals, that understand things like budgeting, understand really how to stick to a budget, understand how your income and expenses. So whatever level you might be, I think that you might start when you're young, in grammar school, understand a little bit about how money works, how our financial system works when you get into high school, understand how budgeting works when you're at that level. And as you get older, understand things like, and I think for those who are savvy enough, and I personally would not consider myself at this, that if you are financially literate in terms of financial planning at a young age, that even saving a little bit of money, again, whether you have a lot of money or even a little bit of money every month in your 20s when you're starting off your career, could make the critical difference between retiring successfully at that age you want to retire versus realizing that you're reaching a certain point in your 50s and 60s and not realizing that you didn't have saving out for retirement. So I do think that even a little bit, but do it early and do it consistently, I think is a key throughout sort of being a financial literate person.
Well, I think that concludes our discussion for tonight. Thank you so much, sir.
All
Uh,
right.
Thank you. If there's any more questions, feel free to email us. This is going to the audience at newenglandfinancialliteracy@gmail.com. You can find our website at https /newenglandfinlit.wixsite.com/website. On our website, you can find free articles and videos made by fellow students specifically for this project. You can follow us on Instagram at New England Financial Literacy, where we post weekly updates and links to new articles. All right, have a great day, and I hope you learned something. Thank you.
Thank
Goodbye.
you, Ben.